Moving on to the inflation tornado, seems to be cooling off. We got a jolt today if you're an econ nerd like a bunch of us. Two big announcements from the Fed coming today. First, the Federal Reserve has decided to keep interest rates at a record 5.5%. Now, despite pressure to slash rates, Chair Jerome Powell says he's waiting until inflation is below 2%. Right now it's 2.7%. You compare that to 7%, which was the high when things were skyrocketing in price during the pandemic. Secondly, there's the general cost of stuff. The Labor Department announced today that in May, the Consumer Price Index stayed the same too, though it's up more than 3% from a year ago. It's a lot of numbers. So what does this all mean for you? That is the question. Gordon Severson spoke to some experts who say they are feeling optimistic.
The Federal Reserve did a whole lot of nothing. They left interest rates where they've been.
While it's not exactly the answer many American consumers were hoping for,
there's some room there that markets can still be jubilant about.
University of St. Thomas economics professor Tyler Shipper says there are plenty of reasons to be optimistic about inflation.
Today's non-decision still leaves open the fact that we could have lower interest rates later on this year, and we did get some good news on that front.
With 2 straight months of promising inflation numbers, Shipper says many economists believe the Fed could still cut interest rates 1 or 2 times by the end of the year. A national financial services company says after this latest report, there is now a 61% chance the Fed will cut rates during their quarterly meeting in September, and a 93% chance the Fed will cut rates again in December.
Those are coming, but it's going to take a little bit more data for the Federal Reserve to be sure about this.
Professor Shipper says there are other reasons to be optimistic as well. The latest Consumer Price Index shows food prices stayed flat and gas prices went down. But the sticky area that just won't budge is the cost of shelter. Shipper says if the cost of rent does come down, then we could see some major progress in the fight against inflation.
If you take shelter out of the CPI, inflation was 2.1% year over year. So we're pretty much at the Federal Reserve's target. And if you wanted to make an argument for more rate cuts, I think that's what you put your money on.
On the home buying side, local realtors say home prices are starting to stabilize, which is helping buyers who are on a tight budget and pushing more sellers to list their homes.
So I think that message for some sellers is maybe it's time to really get our house in the market. We've been thinking about it for a while.
Jamar Hardy with the Minneapolis Area Realtors Association says their numbers show more homes on the market this spring and summer compared to last year, but fewer sales the last few weeks, which could mean some buyers are holding out hope for lower interest rates. But Hardy says it's more likely seasonal factors, like all the rain we've seen this spring.
Kids getting out of school, graduations happening. I think people that are looking to maybe make a decision based on just family size, they need to get some of those regular distractions out the way to really realize the opportunity to get into a place maybe before school starts back up.
So again, optimism for the future. The market may be tough right now at the current rates, but better economic times may just be a few months away.
Inflation seems to be going the right direction with relatively little pain in terms of higher unemployment or job losses.
Now, if these 2 interest rate cuts do happen in September and December, economists say each of those cuts would be about 0.25%. So we're talking about 0.5% total. If you have credit card debt, experts say you probably won't notice that change too much on your monthly statement, and home buyers probably won't see that change right away either. But economists say you will see a big change in your retirement account because the stock market is already reacting to the reports today, and it will react if those rate cuts do happen later this year. Chris, back to you.
All right, thanks for breaking it down, Gordy.